Welcome back to BizTalks. Today we will discuss about the steps involved in setting up the business. Step 1. Decide on the type of business entity. There are several types of business entities in India, each with its own legal and tax implications. Here's a brief overview of the most common types. 1. Sole proprietorship. This is the simplest and most common type of business entity in India. It is owned and managed by a single person and has unlimited liability, meaning the owner is personally responsible for all debts and losses incurred by the business. 2. Partnership. A partnership is a business entity owned by two or more people who share profits and losses. There are two types of partnerships in India, registered and unregistered. Registered partnerships have certain legal benefits and are governed by the Indian Partnership Act, while unregistered partnerships are not recognized as a separate legal entity and are taxed based on the individual partner's income. 3. Limited Liability Partnership, LLP. An LLP is a hybrid of a partnership and a company. It provides limited liability to its partners, meaning they are not personally liable for the debts and losses of the business. However, an LLP also has more legal formalities and compliance requirements than a partnership. 4. Private Limited Company. A private limited company is a separate legal entity from its owners and shareholders, providing limited liability to its shareholders. It requires at least 2 shareholders and 2 directors, and has more legal formalities and compliance requirements than a sole proprietorship or partnership. 5. Public Limited Company. A public limited company is similar to a private limited company, but can have an unlimited number of shareholders and can offer its shares to the public. It's important to carefully consider which type of business entity is best for your business, based on factors such as liability, ownership, taxation, and compliance requirements. Step 2. Obtain Digital Signature Certificate, DSC, and Director Identification Number, DIN. A Digital Signature Certificate, DSC, is a digital signature that verifies the authenticity of electronic documents, such as incorporation documents and tax returns. A Director Identification Number, DIN, is a unique identification number assigned to each director of the company. To obtain a DSC and DIN, you need to submit an application to the Ministry of Corporate Affairs, MCA, and complete the necessary verification process. Step 3. Reserve a unique name for the business. Once you have obtained the DSC and DIN, you need to reserve a unique name for your business. You can check the availability of your desired name on the MCA website and reserve it by filing an online application. The name should not be identical or similar to an existing company or trademark, and should comply with the guidelines specified by the MCA. Step 4. File the incorporation documents. After reserving the name, the next step is to file the incorporation documents with the Registrar of Companies, ROC. The documents include the Memorandum of Association, MOA, and Articles of Association, AOA, which outline the objectives and rules of the company, respectively. You also need to submit proof of identity and address of the directors and shareholders, as well as a declaration of compliance with all legal requirements. Step 5. Obtain Permanent Account Number, PAN, and Tax Account Number, TAN. After the incorporation documents are filed and approved by the ROC, you need to obtain a Permanent Account Number, PAN, and Tax Account Number, TAN, for your business. A PAN is a unique identification number assigned to businesses for tax purposes, while a TAN is required for deducting and depositing tax deducted at source. You can apply for both PAN and TAN online through the NSDL website. Step 6. Register for Goods and Services Tax, GST. If your business is involved in the supply of goods or services, you need to register for the Goods and Services Tax, GST, which is a value-added tax levied on the sale of goods and services in India. You can register for GST online through the GST portal by providing the required information such as PAN, TAN, bank details, and proof of business address. Step 7. Open a bank account and register for other licenses and permits. Once you have obtained all the necessary registrations and licenses, you can open a bank account in the name of your business and start operating. You may also need to register for other licenses and permits depending on the nature of your business, such as a shops and establishments license, environmental clearance, and trade license. In conclusion, setting up a business in India involves several legal and regulatory formalities that need to be completed in a systematic and timely manner. It's essential to consult with a professional such as a lawyer or a chartered accountant to ensure compliance with all the relevant laws and regulations, and to avoid any legal or financial issues down the line. Thanks for watching. Stay tuned for more videos on our channel BizTalks, where we will cover each step in detail and provide more valuable information on starting a business in India. Subscribe and hit the notification bell to stay updated.